My bad, man. My bad. Okay, we're recording. We're recording. My bad, buddy. Okay, okay, okay. The previous one I recorded, by the way, so I'll send you guys the first one. I'll record. This is being recorded from right now. So let me start back one more time. Not a worry, man. Not a worry. Okay, so let me start back one more time. How did I buy this area right here? Skirt, skirt. All right. So why did I buy this area? Number one, daily was bullish. We already established that. Now I saw this happen on the 4 hour right here, which caught my interest because that means that first of all, I'm not even looking to sell this pair. I'm bullish, right? Because of the daily. And even though liquidity has been taken, we've broke structure. Which structure have we broken right here? See this? I don't care about this structure, this, or even or any of these. I'm looking at this one. This is the most recent structure that's been broken. Truthfully, this is the most recent structure that's been broken. Okay, we got the point. Now I'm seeing this little bear candle down. Beautiful. I'm hitting down to the H1. Now, as I said before, what I saw first was this bullish engulfing candlestick being played from already. So I missed this move out. No worries. I can always look to re-enter. Why did I'm okay with it. Why? Because I saw that we had ourselves a bearish order block in the form of a bearish engulfing, which to me in my head is just super clear what I need to do next. My standard operating procedure is, if in an uptrend, in fact, I'm just going to go ahead and write that down here. If in an uptrend, bearish, I can't freaking type. Hold on. Bearish engulfing disrespected equals to bullish buy zone. Buddy, my keyboard's wank. Okay, cool. There we go. If in an uptrend, I'm going to go ahead and make that bigger for you guys. If in an uptrend, bearish engulfing gets disrespected is equivalent to you using that as a buy zone. Okay? So what do I see here? Let's follow this. Let's follow everything here, okay? Are we in an uptrend? Hope I don't have to keep going back and showing you guys this. We are in an uptrend. I've mentioned this so many times. From where? From here. Beautiful. Okay, so first answer has been, first question, excuse me, has been answered. What's the second thing? Do we have a bearish engulfing being disrespected? Yeah, we do. In fact, it's right here. Bearish engulfing. Can you see this? This bearish candle right here engulfs the entirety of the left candle. This huge candle right here, if my mouse is on. Okay, beautiful. So I'm having my thing right there. So what do I mean by disrespected? I want to see a candle trade above it, have the body close. Beautiful. Okay, so I'm not even interested in this engulfing that I missed. No worries, I can always look for a re-entry. Now, there are two ways of me doing this. Again, everything is discretionary. I could take this zone, which I have my zone already drawn out at, or I could use this as a bullish order block. How can I do that? I can just take the last down candle. Think about this again and again and again. I can just take the last down candle before the break of, again, I don't care about this structure, before the break of this structure. Where did this structure get broken at? Right here, by this long up candle. So there's two ways of me looking at the market. I can take this last down candle before the BOS, or I could just take my engulfing zone. Let's do it both ways. So bearish engulfing disrespected, check mark equals bullish buy zone. So let's take it as the disrespect of the bearish engulfing. Again, let me just follow all my rules, right? I see price traded lower. Pay attention right here, my friends. Take a look at this. I hope I'm going to give you guys 5 seconds to spot the QM. I pray you guys can spot it. If you can't, don't worry about it. I'll teach you, I'll show you guys where it's at. But I hope you guys can spot the bullish QM inside of the failed bearish engulfing zone, AKA the bullish order block. Okay, 5 seconds is up. Here it's at. Right here, my friends. Let's get the trend line. Do you see this low? Okay, first of all, you're wondering why not this low though? This is a low too, right? Sure, let's go with this one. Do we get a break of structure? No, we don't. Okay, so move on with it. Okay, you see this low? What am I looking for next? So I see this wick coming down. I'm looking right after this wick. I want to see break of structure. I don't see that. We get some more wicks down. Okay, no worries. What am I looking for next? My fixation is still on this. I'm waiting for this structure. Why this though? Again, same old concept. What was the structure that created this supposed stop hunt? I want to see that get broken. Guess what I get? Take your little line out. We get a disrespect. How do we get a disrespect? Candle's body closes above. Beautiful. Okay, price trades. Now what am I looking for? Simple. I'm just looking for the last down candle. Again, the last down candle that broke this structure. What's the last down candle? This boy right here. Yes, it's a bullish engulfing too. I'm just trying to I just want to get into your heads how engulfing candlesticks are just so, number one, they're so easy to spot. Number two, they are so easy to trade once you get the hang of it. Once you get the standard operating procedures, they're super freaking easy to trade. Number three, they happen so freaking often, it's crazy. Okay, last down candle, excuse me, before the push up. Beautiful. Again, I'm buying right here. Where's my stop loss? Oh, but the wick. Nah, where's my stop loss gonna be, brother? I don't even know that the wick came down here. Okay, I just bought over here. And now I'm panicking, all the wicks coming down. Where's my stop loss gonna be? It's gonna be a couple pips, including your broker's spread, below the mitigation. See this last little wick here before the break of structure? You get that. Okay, so what am I doing? I'm getting my horizontal line up. Bam. Maybe, I don't know, my spread for gold is about 3 pips. So that means taking 3 away from this, which would make it 04. Bam. 3 pips away from the mitigation. I'm done. Why 3 pips? That's just because of my broker. That's it. All right. So what's my risk parameters? Let's find out. What are my risk parameters? I take this from my entry all the way down. What's that? 9 freaking pips. Today I put it at 10.6 pips. I remember that, 10.6 pips. But over here it says 9.6 pips. Beautiful. Freaking 9 pips stop loss for gold. That's crazy, bro. All right, cool. Stop loss below here. I enter, right? I see price going in my way, da la la. Where the freaking hell do I enter? Think about this. Have you guys ever been faced with this situation, right? Price is here. Price is right here. The only highs you have to look at from the left is high number 1 and high number 2. And you're like, damn, if only I could potentially get more out of this market, out of this strongly bullish market. This is what I did today. And I hope you guys can follow along with this. I went to the weekly, right? And I went all the way back. So I'm looking all the way here. Okay. Now my entry, I'm going to get this coordinate. Give me 1 second, guys, just to meddle with this, right? So I'm getting these coordinates and then I'm going to make a horizontal line for you guys so you can see. Ew, red is disgusting. I'm going to get, okay, there we go. Beautiful. Okay. Now guess what I was looking at? This is my entry. This is on gold, by the way, this on the weekly. Okay. My entry was right here. Guess what I was looking at? I was just looking here. You see these highs in the form of what? In the form of wicks, right? Price hasn't even traded to them. So guess where my freaking take profit was? Bam. Optionally. Bam. Right there. Those are my take profits. Now I took my profit over here. I wanted to be done with the day, to be honest with you. And plus, I don't know if price is going to trade up here, right? I don't know that. Price could just take these highs, take the liquidity from there, and then reverse. I don't know why people think gold is just going to instantly reverse in one day. That's impossible. It's not impossible, but it rarely ever freaking happens. It takes time to reverse, especially when you're in a strong uptrend. So I looked at these highs. That's why I put it, I believe it was on my Instagram channel, my Instagram page. I said gold to 1828 ? Right? And the rest is history. That's it. That's all I did. I could have just taken my profits up here. Sure, 100%. Okay, but I was like, since we're in such a strong bullish market, let's see how much we could get. Now think about this. I risked 9 pips stop loss. Let's take it at 10 pips. 10 pips stop loss I risked. Beautiful, right? And I had to take profit of. I took partials at 30 pips. I always do that. Just a thing with me. So I took my entry right here. Bam. 99 pips, 100 pips. Done. No. 100 pips in a day, I'm happy, bro. If I can get 50 pips in a day, I'm done for the day. But if I can get 100 pips, hell yeah, why not? So I was literally risk-free from the get-go because I had number one, I had a 10 pip stop loss. My mind was saying the worst that could come out of this is that I lose 10 pips. But the best that could come out of this with all of the confluences that I already have in mind is a freaking 100 pip trade, bro. And I'm only risking 10 pips. Beautiful. Took it. Bam. Blessed up. That's it. Done. So that's XAU USD done. Now, I promised you guys that I will cover how. You see this huge freaking bull move. Now, a lot of you guys who haven't actually traded for too long, you would have just wished to have gotten in on this move, right? Let's be honest. You would have wished you could be the buyer right here. Let me teach you guys how you could have gotten this. I was not in it because as knows why, but let's not get into that. Why I wasn't in this, as knows why. But okay, so how could you have been a buyer right here? Right? First of all, why would you want to buy? Let me get everything off of my chart. Remove all of that shit. Okay. Why would you want to be a buyer? First, I'm going to look at weekly, and then I want you guys to pay most attention to the daily. Okay. Just for now. I'm taking a look at the weekly. You see all this liquidity residing in these lows? Bam. Fuck you. They took all of that liquidity. Okay. Do you see something else though? Right after that, okay, so what? It took liquidity. I needed to show strength, right? Okay. See the structure up here. Why is this structure? Well, price came up here. Seller said, nah, I'm going to shoot you down. Price shot itself down. Okay, no worries. But guess what it left up here? When price came up, price broke the structure. How do I know it broke structure? There's a candle body that closed above it. Beautiful. So what does that mean? On the weekly, one, we took all of the liquidity that's down here, number one. So that's a huge ass weekly stop hunt. Okay, cool, fantastic. Number two, I see a sign of strength, right? Now, tell me if you guys get this. Is this not literally what I just taught you guys, but on the M5? Now I'm teaching it to you guys on the weekly. Is this not your type 2 QM? Don't you have your stop hunt? Okay, you know what? I'm not even going to draw it. Don't you have your stop hunt? You would like to see these highs get broken. It doesn't happen, comes up and it fails. So now I'm focusing here. So is this not your stop hunt? Your shift of market structure, focusing on the structure up here that gets broken. Now you're waiting for price to trade right back into the last bearish candlestick that caused the break of structure. Mind blown. I don't know about you guys. I'm freaking mind blown when I found this shit. I was like, okay, I'm trying to be a buyer. Cool. So on the weekly, we're buying. Why? I just thought you guys the whole QM thing, sure. But really, it's because we took all of the lows down here. Number two, we broke structure to the upside. Let's keep it simple. Let's keep it simple. Heading down to the daily. Now, if you were a retail trader, how would you look at this? Wouldn't you look at this last down candle as structure? Bearish structure. Remember what I told you guys. I don't care about what happens here. I'm caring about the latest. If I'm trying to buy, I'm trying to care about the latest bearish structure that gets disrespected. And disrespected meaning a body close above it. Do I get a body close above it? Beautiful. Price comes back, trades inside here. Watch this. Price comes back and trades inside here, right? Wouldn't you like to be a buyer here? I'm sure everybody would like to be a buyer down here. Let's find out. Wouldn't you like to be a buyer down here? This was where that little wick was, okay? Remember what I told you about engulfing, right? Engulfing's my girlfriend, bro. Take a look at this. You see this? Bullish engulf. I hope you guys can see this, man. Bullish engulfing candlestick. Boom. Drawing my zone, right? So all of this price right here has never been played out before. Now, I covered this trade that I took for 122 pips in my first Zoom. Let me show you guys how I took this one, okay? So what would I like to look for when price comes inside here? I'd like to look for my bullish QM, sure. Let's head down to the 1 hour time frame, for example. Okay, so I look for my bullish QM, say 5 minutes, 1 minute, if I'm feeling lucky, 1 minute time frame. I'm not so good with trading the 1 minute time frames, to be honest. I don't see that. What do I mean by I don't see that? I have a low. I have structure that never gets broken. Okay, I see price trading back to this little order block. There's a shift in market structure. I'm focusing on this being broken. It gets broken, comes back in here, and it stops you out. Guess what? This QM thing, it fails sometimes. It happens. So what? But guess what I found out? I found out that if price does not create a QM over here, I can still rely on FVGs. Now, somebody in the chat was talking about what the heck is an FVG? These are all FVGs, my friends. Wait, hold on. Where was it? Oh, this is here. It's right here. Okay. So this is where you would like to be a buyer here, right? These are all FVGs. Why isn't this an FVG? Because price comes in to fill that gap. Your FVG starts from, see this little gap right here? Right? Your FVG starts here. Price comes in to fill that. I'm not trying to take a trade like that. No, I'm looking at what else can I look for? Either I look for a lower time frame bullish QM, which I don't know if it's going to happen. It could, but it also could not, right? I saw this FVG down here. This sly look at this. That's a beauty, isn't it? Now, how do I trade FVGs? How do so many other people, smart money traders, trade FVGs? They take the mean threshold. What the mean threshold is, it's literally just a 50%. It's just a fancy way of saying 50%. That's it. I like to keep it simple. Screw all that mean threshold shit. 50%. Boom. Slap that on there. Buy this. Boom. You're done. Where would you have your stop loss though? That's the most important thing. You want me to be honest? I had a 20 pip stop loss. Where was my stop loss? Right below this wick. No cap, that's where I had my stop loss. But I had so many freaking confluences on my side. What were the confluences? Daily bullish structure, H4 bullish QM, H1 FVG. I'm happy with it. I'm happy with it. I took my buy for about 20 pips stop loss. Where did I take my profits? Right? Where did I take my profits? I wanted to be safe with this. I took my profits at the next bearish engulfing. Now I have a little thing that goes on where if I buy because of a H4 engulfing zone like this right here, I want to take my profits at a H4 bearish engulfing zone. Let me go on that one more time. If I buy from a H4 bullish engulfing zone, I want to most likely take my profits at a H4 bearish engulfing zone. So if I'm selling from a bearish engulfing zone like this, take a look. You see this bearish engulfing here failed, and I'll show you how there was never a freaking reason for you to take the trade over here, because I don't believe in having a little sell limit here and you sell and then you get effed up. No, I believe in having your, H4, H1 order blocks, but that lower time frame QM. Right? The price trades in here, it doesn't, okay, whatever. So you see over here, you're bearish engulfing, right? So if you were to have taken a trade over here, I don't think that was a valid trade, but let's say there was. If you were to take a little counter trend sell, because this would be counter trend, okay, look where price stops at. Your next bullish engulfing candlestick. Sell from bearish engulfing, take profit at bullish engulfing. Buy from bullish engulfing, take profit at bearish engulfing. I took it over here. It was just safer for me. I was happy, bro. 122 pips. Don't believe me? Let me show you this shit. 113, my bad. 113, 117, 120 pips profit, roughly, right? Basically 100 pips profit. I'm happy. That's really, really good. Okay. Now, yes, price is trading lower. Yes, price is trading lower, but what the hell is the main agenda? You want to find that out from, your daily timeframes, your daily, your weekly, whatever. So weekly, we already established we had this bullish breaker structure. Beautiful. Daily, we also established that we had this bullish breaker structure. Plus, over here, most recent structure, we broke that. Okay. Oh, wow. We have 8 people in this chat. What is up, my friends? Okay. So yeah, what was I saying? Bullish breaker structure, retest. So you could have been a buyer right here, and I just showed you how. Now, let's say you missed that opportunity. No biggie. No problem. You missed that opportunity. Oh, man, how can I get in this bullish market again? Because it's bullish, right? Take a look at this. So this was Monday. Okay, this happened on Monday. So this is Tuesday. Right now we're trading in Tuesday. This Monday, right? Okay, you guys know the days of the week. Fantastic. Take a look at this. You see this bullish engulfing right here, right? Sorry if my chart's messy with all the horizontal, vertical lines. Price trades inside, okay? And you would have gotten a little buy over here, if you will. I'm just showing you guys the actual big trade, how that could have happened, but sure. Over here, how I would have entered would be after this bullish engulfing, or I just would have not entered at all, because although I say that, okay, yeah, you can enter from a lower time frame candlestick confirmation, it's not as safe as seeing a bullish QM. I think we can all agree with that. Let me switch on the AC. This shit. Okay. I think we can all agree that QMs are freaking safe and the risk to reward just goes through the roof, right? Now I see a second little dip down. I don't see an entry. If I wanted to enter over here, 100% you would have gone stopped out. Why? You see your little stop hunt, price doesn't even reach in here. So now you're focusing here. Price doesn't reach to your bullish OB. So you want to see a stop hunt of this. You do see it, and you don't see a sign of strength. So you're like, okay, what the hell do I do? Now think about this. Why would you have wanted to take, why would this have been a valid QM? It wouldn't have been. And let me explain why. See this low and this lower low, this breaker structure. Oh, price came down here and it just broke through. Think about this. Which is the lowest low that you want to see price get stop hunted into your bullish OB? This is the lowest low. There's no other low that's lower than this. Look, there's no other low in recent times that is lower than this. Take a look here. This is not lower than this either. So you're focusing on this getting stop hunted and then the structure up here to be broken. And that doesn't happen. So equals no trade. Here, if you wanted to focus on this, which I told you why you're doing that, again, there's no break above this. Okay, you guys get that. So for me, I don't see a potential trade up here besides all of these little confirmations, but I'd like to teach you guys how to take them as QMs. Okay, so how could you have taken this big trade? Okay, let's get to the point. How could you have taken this huge ass trade? All right, let me show you guys real quick. Turn off session breaks. Okay, so Friday. Let's see how Friday closed real quick. Is this not a bullish engulfing, a bullish order block right here? This little last down candle before price moved away. Not so clear. Okay, no problem. Let's go down to the H1. Always got ways to explain, man. Don't worry about that. Is this not an area where this was the last down, listen to my words, the last down candlestick before a breaker structure? Is this not that? Okay, it is. If you say it's not, then you're wrong. All right, cool. Price trades inside that on Monday. Okay, price trades inside this on Monday. What am I looking for? I'm looking for my bullish QM. Why? Because if something happened in here, something must have happened in here that's really strong to cause a surge of buyers to break the structure. Am I right? So when price comes back in here, coupled with the fact that you're bullish on daily and weekly, I don't want to keep on going over that. You should see something happening in here to push price up. I hope you guys agree with that. Let's take a look at what price does. comes down on Monday, boom, creates one low, creates another low. This stop on this, you're focusing on this to get a BMS, nothing happens. And I'm going to start using the abbreviations, SH and all that stuff. SH means stop on. I hope you guys memorize that shit. Okay, you have your low, SH. You want to see a BMS? Never happens. Where's your focus now? Here. Here's your new low now that you want to see stop hunted. Get stop hunted. Where's your focus at right now though? Your focus is on this, getting a BMS. Never freaking happens. Now you're focusing on this low. What do you want to see? You want to see your stop on, right? So you get your SH. What do you want to see after your SH? I think you guys know where I'm going with this. This could have been so massive. You have no idea how massive this trade could have been. You have your SH. Am I right? I'm right. Okay. What do you want to see next? Your little BMS. Do you have a candle closing above this wick? 100% you do. What's next, buddy? What's next, buddy? You want to find the last bearish candlestick before the break of this structure. What's the last one? Well, trade what your eyes see. Oh, but could it be this one? No, I just told you. What's the last bearish candlestick before the break of the structure? I'm not talking about this. It's not the last bearish candlestick. This is the last bearish candlestick before the push up here. And then there was another bearish candlestick, but this was the last one before that BMS. And take a look at what happens when price trades inside this. So I have my buy right here, right? Give me 1 second, my friends. So I have my buy put in. Okay, I'm locked into a buy right now. Okay, my God. This looks like a retail trader stop loss just now. Where would I have my SL? Having my SL, I told you, below the stop on. Am I right? How do I know that this is a stop on? Why isn't this a stop on or this a stop on? Because none of these broke any structure. Why is this a stop on then? Because this is a break of structure of this previous low. Thus, I deem it as a stop on. Again, does it mean that it's 100% going to go up? No, in this instance, it did. Stop loss below the stop hunt. Okay, so let's say about 3 pips below or something. So yeah, over here. Beautiful. Where am I trying to take my profit at? So, I mean, the rest is history. Price never freaking returns. It's gone with the wind. Where could I have taken my profits? Okay, beautiful. Me personally, if you wanted to be a little swing trader or something, right? You could have taken your profits up here. Sure. For me, where's my safe take profit? Take a look at this. Remember what I told you guys about gold, right? Remember what I told you guys about gold? It's in this little contraction, consolidation phase. It's tricking, it's tricking sellers by saying, oh, it's a sign of weakness. So when it trades back up here, it's going to be a long ass short down. It's doing all of that stuff. But really your higher time frame is saying, let's go bull, let's go bull, let's go bull. Price trades inside. What is the highest high inside of this entire freaking contraction? This was the lowest low. What was the highest high? Am I right by saying it's this one? Of course it is. So I'm having my take profit right up here. Do I see any other high touching it, getting higher? No. This, yeah, but we're not trading in that range. We're trading in this range right here. This range from the lowest low to the highest high. Take my profits up there, buddy. How much would this have resulted in? Well, I don't care about pips, 145 pips, but 1 to freaking 20 risk to reward, buddy. So you're risking 1% of your account for freaking 20% back. That's crazy. That's crazy talk. How many pips though? Okay, since you guys want to talk about pips, you can read 7.2 pips for 145 pips. Done. No, that's it. That's all you're doing. 145 pips, done. You're out of the market. Last one I want to talk about before you guys ask me questions is, which was the one? AU, which was, I'm so freaking sad. I even got it marked up and everything. Take a look at this one, guys. All right. Let me go session breaks. Okay. So this is the highest high of this entire, look, which is the lowest low of this entire contraption here. Contraption, what the hell? This entire range. This is the lowest low. There's no other low that touches it, at least for now. This is the highest high, and there's no, you have to understand, none of this was printed yet, okay? This is the highest high, and none of the other highs have touched it just yet, right? You guys agree? Okay, highest high. And again, why are we buying? Okay, let me answer that question. Why are we buying? Why not sells? DXY is, took the lows and shit. Why are we not looking for sells, right? Sure, the dollar rules, 100%. I'm not taking anything away from that. But you also have to make sense of a trade, right? If there's everything on a chart that's pointing towards buys, chances are price is going to bull. That's all I'm saying, all right? So when I take a look at this, what's the first thing I do? Remember what I taught you guys with gold? Little trick over here. Hit over to the candle section. I go over to the line chart. My bad. Did I go line chart? Yeah, I did. Okay. Have to understand, none of this played out yet, okay? So in your head, screw all of this stuff. I'm paying attention here. Do you guys see this? Is this not a bullish BMS, bullish break of market structure? Hell yeah. That means strength, 100%. Okay, so how would this look like if you were to draw it, right? So I see these highs. See that? And guess what I'm seeing? If I were to drag it out, there's a candle that has a body that closes above it. That's so important. The candle body has to freaking close above it. I don't want to see no wicks. See no wicks. Got to make a song out of that shit. Okay? I want to see a candle body close above it. Beautiful. I see that. Bullish structure. Fantastic. Liquidity up here. Fantastic. Okay. I'm not, and again, none of this was made out of the freaking weekly chart. This was just mainly daily. If you want to go to the weekly, I don't want to complicate shit, but if you want to go to the weekly, you can see what's the most recent bearish structure that gets broken right here. You don't believe me? Okay. What about this one? This bearish structure, it gets broken. What about this one up here? It gets broken. We are freaking bullish, guys. Don't go selling this shit. Okay. So daily and weekly, I've proven bullish. Beautiful. So all I'm waiting for, what am I waiting for, guys? I am waiting for, oh, session breaks is only on 4 hour. Okay, beautiful. I'm waiting for price to pull into a bullish order block before it goes bye-bye. Okay. Again, this stuff happened on Monday, which makes me so freaking mad that I wasn't a part of the trade. This is today, Monday, Friday. Beautiful. So when Monday opened, what was the last down candle before a push up? Again, what do you guys see? Besides the fact that this was, in fact, the last down candle before the push up, this is an engulfing, is it not? This is an engulfing candlestick. You can't even argue. That's a freaking engulfing candlestick. Guess what I'm doing? I'm drawing this shit. Done. Okay. Have 10 minutes left, guys, just saying. So I'm heading down to the 1 hour. Guess what I'm doing in the 1 hour? I'm like, I could refine the zone. So there's potential of price coming down to this last down candle before the, do you guys see why I chose this? Why did I choose this? Because there's structure here and something happened in here that pushed price up to break the structure. So what's going on in my head? I want to see price trade back down here, do a bullish QM and fly. Guess what I see, guys? Let me go over to the 5 minute first. When I see price come inside, look, this is when Monday opened. You see this little glitch in the matrix? Monday comes down. Guess what I freaking see, bro? Stop hunt. Structure I want broken never happens. Guess what I'm focusing on now? I'm focusing on this low. And I'm focusing on the structure here because now my mind is saying, okay, if this low doesn't get broken, I'm focusing now on stop hunt, SMS, BMS, RTO, entry. But guess what? Even this one fails, right? So I've not even entered a thing. So now which is my SMS? My SMS is now this one. Why? Because the structure here didn't get taken out. So now I'm focused on this structure and this new low, which is still a higher low in comparison to the supposed stop hunt. So now I'm waiting for this structure to get broken. Do I see this structure get broken? Right here? Boom, it does. When am I going to enter? Well, you would have missed the trade. I'm being 100% real with you guys. You would have missed the trade if you wanted to enter over here. But again, I'm being real with you guys. If you were to have gone to the 15 minute, number one, you would have realized that the 15 minute did a beautiful QM. Stop hunt. Even if you wanted to focus on this structure, right? Stop hunt. Structure gets broken here. If you're focusing on SMS, that the little QM variation, you have your stop hunt, SMS, BMS by this big candle. And where's your, oh man, it doesn't return. Boom, right down here. This was London, I believe. Look, right before London, 1 hour before London. London for me is 16. So 4 p.m. my time is London. Right before London, this sets up beautifully. And again, I'm all about that risk to reward. It's okay if you guys believe in having 20 pip stop losses. I prefer not to unless it's gold or some shit. Okay, so guess what my stop loss would be on this one? And I didn't take it. I'm being real with you guys. I did not take this trade because of as knows why. I don't want to say shit. Okay, last down candle before the break of structure. Hope you guys get that. Bullish QM. Price comes down. I'll answer that in a second. You buy off of this. How much are you risking? That's the most important thing to me. I am risking, I think about 12 pips. 8.3 pips. Okay, with your spread and shit. 10 pips. What a beauty that one is. Okay, let me answer this. Give me a sec. He sell a, yeah, bro, freaking I don't even want to say shit, bro. I don't even want to say anything, man. For real, get that shit. Yeah, facts, bro. I'm like, bro, there's every reason to point towards a bull. Anyway. So you're buying up here, freaking 10 pips stop loss, buddy. You're risking 10 pips. Okay, get that shit in. 10 pips. Where am I targeting? Well, since I'm buying right here, my first target could be the previous daily high, the previous daily highs, or I could simply just take the entire high of the range, bro. Look, the low is right here. The high of the range is right here. Taking the high of the range, sure. So you could have a little TP1 You could have a little TP2, done, no, you're out. So how many pips would this have been profit-wise? Because I know a lot of people want to know, okay, if I were to have gotten in this trade, how profitable would it be? I got the answer for that too. Give me a sec, y'all. So we already know we're risking how much, buddy? 8.4-ish pips. You can see below those arrows there. How much did we get out of the first TP? This one here. 55 pips. 55 pips. Beautiful. A blessing. Let your second position run. 83 pips, my friends. Done. I'm out of there. This is my trusted range. I mean, I don't know how high price can go, but look, 83 pips. And this happened in 2 days. Monday, swing hold it for Tuesday, which is today, hit, take profit. And plus, you know, strategically, Tuesday is when the higher the low usually happens. I don't really trust that too much, but going by that concept. Now, I just want to teach some of you new guys a little something here that I think in the first or second Zoom session, what I like to do with my risk risk management is I like to put my trade into, so risk-free, right? I like to make my trade risk-free at 20 pips. Okay, so 20 pips, my entire position, let's say I had 0.10 as my lot size, the entire 0.10 risk-free. So move your stop loss to break even. The second thing I like to do is to lock 30 pips while at 30 pips. So once I see that my, let's say 0.10 has reached 30 pips in profit, I'm locking in 30 pips. So I'm closing my position. I'm closing, man, my maths, bro. I'm closing 20% of my position, excuse me. So I'm closing 20% of my position. My bad, bro, my bad. I've locked 20% of my position, okay? So at 30 pips. Once price goes 20 pips, I'm risk-free in the trade. I can go and chill with my parents, freaking smoke shisha. And then at 30 pips, I'm closing 20% of my position. So you have to understand what setups you're looking at right now just to help everyone see something. Okay, let me show you guys a little something. I'm gonna finish this up. I'll start a new meeting. It's gonna be the last meeting, and we're just gonna go over some future setups, okay? I hope that sounds good. So after 30 pips, I'm gonna lock 50% of my position. Write these down if you think it's worth it. If you think it's bullshit, don't write it down, okay? At 50 pips. So once I'm at 20 pips, risk-free trades, 30 pips, I confirm I lock 20% of my position, 50 pips, I lock 50% of my position. The remainder of my position, which if I'm using 0.10, that means I would have already confirmed 70% of my position, meaning I have left running 0.03 lot size left running at completely risk-free, okay? I'm gonna have this right here, risk-free 20 pips, lock 20%, 30 pips, lock 50% of my position at 50 pips. Okay, so I'm going to start, yeah, I'm in KL, bro, Subang Jaya, SS12. I just gave you my address, come meet me. Okay, so yeah, buddy, I'm gonna close this meeting. If you guys are interested in joining, in the next one, I'm going to go over future setups. I'm going to analyze my favorite pairs and give you guys my 2 cents about it. Follow it if you want to, and that's perfectly cool if you don't want to. So I'm gonna close this right now, all right? Serdang. Oh, nice, bro. That's pretty far from you, I think, right? Okay, I'll see you in the next one, though, okay?